This is recording because we got to have it recorded. I actually started kind of late on this morning's recording. Lord only knows why. I'm going to blame my VPS and totally get away with it. But I did get it recorded, so that's done uploading now. Let's make sure this is good, and it is. So gotcha. So welcome everyone real quick. I know Miss Donna has control of YouTube and is actually kind of the co-host in here to make sure everything's running smoothly. So hi, Donna. I hope that you're happy to have Kaden back. She can unmute herself or not.
Hi,
But
thank you. I'm here.
you are welcome. It's been a little while, so I hope you're doing super awesome.
We're doing good, thank you.
Yes, ma'am. And her and that Texas reception. There you go. I don't know what's worse. Well, welcome everyone, real quick. This is the Trademarked by Forex kind of super easy beginners class. As you guys know, everything we discuss in this class is meant for educational purposes only. Please do not trade what you cannot afford to lose. And that means I am not your tax advisor, your accountant, your CPA, or anything of the sort. So we're just people hanging out, kind of discussing different approaches and ideas in terms of becoming a sufficient, self-sufficient being the keyword, investor, in the Forex and stock and exchange kind of market. So for those of you guys who don't know, this is something that we kind of share and go over in the other group, the advanced group. But for those of you guys who've never seen this, because some people just haven't, I know it probably looks really, really simple, but either way, for those of you who are looking to compound to 5, 6, or 7 figures, or compound in general, so you're not looking to start with that 10 or 20 grand and just get that very slow growth or slow percentage every day, but you're looking to actively compound, meaning going from a small amount to a large amount, typically in large short amounts of time. These are the things that you need to be kind of looking over. So I went and I dug up some of the rules from before when everyone was using the triple arrow system, and I got those out of the Google Drive, Google Docs more accurately, but to kind of go over that tonight. So if you have questions in terms of charts or simplicity, by all means, Donna is running YouTube, so she can kind of get a chance to answer any questions on there. And if it's obviously, if you're in the group, you can go ahead and come out and speak. You guys know that super big on that whole openness topic. Tons of messages in Telegram, which we can't get to all those individually. So now is the time where you can get help. There is no question too big or too small. So please don't feel dumb if you feel like coming on out and asking a question. But otherwise, what I like to go over is rules. So one of the most simple things to discuss in terms of how to compound or just trade in general is having a trading plan or rules. And as silly as that sounds, I remember I got kind of lucky just playing with the ticks on my phone when I first found out about trading. And I mean it was almost stupid easy. Like it was whoa. And of course I didn't even know what a lot size was or a pip was. Better yet, a pipette. I didn't know anything. I was just like buying and selling and closing out with like a portion of a pip thinking, I can do this. And that was again before I knew anything. So as time went on, obviously I won some, I lost some, and then I really learned the importance of rules and knowing that that's going to be the only thing that really saves you. So if you don't know who VP Morgan is, he's really big on his he has a fancier term for it, but he calls it an algorithm. So his huge step process, including everything from his indicators, the time he trades, how he keeps track of possible trades, closed trades, open trades, checks trades, and he has this whole formula. And of course it sounds cooler and better when you say algorithm, but essentially all it is at the end of the day is a set of rules, a just like you would have if you were a teacher or an insurance agent or a doctor. You would have some form of like order of operations. In this industry, just because you're self-employed doesn't mean you don't need that. In fact, I think you need it even more than you would, because there is no oversight. There is no boss coming to tell you, hey, you didn't do a good job. There is no one but your own bank account and lack of capital to come and tell you what you're missing and what you're not doing right or doing wrong. So these calls are a great place to come and discuss your rules, drag and drop your entries if you're winning or losing. Let's analyze them, let's tweak them, and get you in a place where you can actively withdraw. So here's the first step in terms of how to compound to any amount of money. So I don't care if it's just you're looking for that first 4 figures or what it is, or if you're actually trying to do that like 30 trades to 6, 7 figures thing, whatever your goal is. This is the most important thing that you can have, and that's a trading plan. And that means rules. Your rules should include things, everything from entry, exit, pip target, pip protection or trail, stop loss, how many entries you can be in at once, how you're going to treat news. Your trading plan should be exclusive to one account or at least one strategy. So a specific pair or a couple of pairs that you trade that strategy on. If you're all over the board and you're doing indexes and you're doing CAD JPY and you're doing simplicity and then you're doing some market maker method and then you're doing some other, signals group, and then you're trying these 50 other things on one account, you're never going to know what's working and what's not working, or why something is working and why it's not working. So you can't, analyze critically to get to the bottom of what's happening if you do things that way. So your trading plan should be definitely exclusive to one account, one strategy. Obviously, you can take pieces and parts to other accounts and strategies, but some foundational level of this is what this is for. So have a schedule for how many hours, or your schedule should include how many entries you take per day or per week, and how many hours you'll trade at a time, how many times per day, what that looks like for you. Some of you guys are still working full time. Some people are retired. Some people are self-employed. So we have people from all walks of life, from stay-at-home moms to corporate America, news gurus. So I don't know what your schedule's like and what's going to be most convenient, but you can use multiple tools to find out what pairs and what strategies are going to work better and what sessions, like New York or Asian or London. And you have a ton of options there. But trying to catch every move on every pair all day is a good way to give the market all of your money. So even if you are abnormally good and unusually successful, the odds of you giving it all back just from over trading alone is pretty high. So obviously, you have to increase your lot size based off of your account balance per day, per trade, or per week, depending on kind of which one of those compound sheets you're using. And then, of course, my advice is always, always, always withdraw your 5% of gains. And that's bare minimum. And you should be doing that weekly or bi-weekly. I don't care if it's your own cash flow or not, but to withdraw does something psychologically. Buy that cup of coffee. If you withdrew exactly $21.32, go make a payment to your credit card statement for $21.32. Make this a real experience for you. So it's not just video game money that you see on the screen when you see 3,000 pips and it's like, woohoo. But when you see actual dollars coming in and out that you can actually tangibly spend and taste and feel, whole different world. So does anybody have any questions on that part so far? You have a full meal deal. Okay, Craig. Full meal deal with the fireworks, huh? Not really sure what that means, but anybody at all, because I'm only going to ask once, maybe twice, because I'm pretty patient like that. Okay. Well, then the next thing I'm going to kind of go over, as you guys are not so talkative, is pretty simply the rules that we had created. There's a video in Super EZ that kind of went over the exact rules we used to get to certain points, to compound using the triple arrow system. And as a group, if you guys want to be more interactive, we can create a comparable set of rules of things that you see, use, or like to help you establish at least some foundational trading rules. Now, granted, I think at that time people were a little more conversive, so they were part of making these rules live on video with me. And there's a video in the group that kind of goes over that stuff. But for now, let's, oopsie, and stop that share. Try this again. Let's go to the right screen. So let's go to those rules on Google Docs. We're going to go to the whole screen. And that should be it. So I think you guys can all see this, okay? These rules right here. Yes, I use Grammarly. I'm famous at being able to type. But anyways, so these were rules that we created, like I said, on a video maybe a year and a half or quite a while ago. I don't want to, last edited August 26, 2019. So that's when we last edited it. I'm pretty sure it was a few weeks or months prior to that was when we actively created it. So when we're looking for some basic foundational rules to have in terms of our trading journey, we forget this stuff. Everyone's like, well, how did you get this? Or how did you do this? And well, what about this? And they're all worried about the best indicator. They're worried about the best thing that's going to tell them when to buy and sell, how to hold them, how to close them, when to fold them. But all that stuff means nothing if you don't have the basics in place, if you don't have a foundation. So there's all those quotes like, when you plant something on rocky soil, you're not going to get a good crop kind of thing. So even if you have the world's best tools and the world's best indicators, if you have nothing to manage that and to know that and to work with that, you're going to get a whole bunch of nowhere. So having said that, these were some of the things. Somebody in the chat says can't see. Can you link to the chat? Not sure who that is. Donna, can you help Jay in the chat, please? Pray, please, if she's there. But okay, sorry, Jay, if you can't see. Can you guys all see the rules?
Yeah, it's kind of blurry.
Yes, we can see them.
It's blurry.
Blurry again.
That's fantastic. I think it's the island. I'm gonna blame that. We'll go to a new share. What did you say, Donna? Can you guys see that more clearly?
Looks the same.
Looks the same. Okay. Let's see if
Weird. I'm looking on YouTube and it's clear, but through Zoom it's blurry.
I bet you, this could be it. Let's find out. We'll find out together. So share screen. If I hit optimize screen sharing for video clip, I think that's the one thing that I did differently. Is that clear?
A lot. Yeah, it's
Yeah,
clear.
that's perfectly clear.
It's
Yeah,
good.
yeah, that's perfect.
It looks
So
like it's on a PC now.
Oh, listen to you. My Mac is amazing. Thank you. Actually, I had problems. They had problems remoting into the Mac today from the VPS. They had to remote in to fix it. So that's crazy. That's a Mac thing only.
Oh,
But-
did they take care of it for you? Or
They did. They
Oh,
did.
excellent.
And then I'm going to take Scott's advice and download a Mac-based MT4 too, just to have a backup. So it's probably smart advice, just saying. Probably.
Clear. I can see it.
All right, good. I'm glad. So real quick, sorry about that. That was me optimizing for all the video stuff on YouTube. So if I click that, y'all can't see it on Zoom. If I don't click it, the quality on Zoom, on YouTube is not as good. But since y'all are here now, we're going to worry about you. So back to this kind of, remember, this is something we went over. Now, some of this is not going to apply anymore based off of some changes in the market, obviously, and based off of an entirely different system. But the cool thing is to really get a chance to see how much of this actually is the same. So these were what we had written down. If you guys can think of anything else, by all means, chime in. If you think any of this does not apply anymore because the market has changed, the dynamic has changed, thank you, COVID and politics and civil craziness. Either way, by all means, chime in. So here's what we had so far. This was what, almost a year ago. So first and foremost, always have at least a 1-to-1 risk to reward ratio at bare minimum. Obviously, this does not apply. Well, I can't type or talk to scalping. You need kind of more room in terms of scalping, but as everyone kind of agreeing on that in terms of when you're using simplicity or doing anything other than scalping, it's probably a good idea to have at least 1-to-1 bare minimum. That's interesting. Apply. There we go. At least I put that word in. Next was avoid red folder news. Swings for 48 hours, scalps for an hour. So you're avoiding taking a trade within 48 hours or scalping 1 hour kind of in that window. Anybody think that should stay or go, or? I think it should go.
Yeah.
Because the news is what moves the market the most.
Yeah. Two days. That's like,
Well, that was kind of the rule of thumb. So in terms of taking those really long swing trade moves, but keep in mind how flat the market was a year ago. The market was really in that flat, not very volatile point. So when you were looking for the jump, you needed to avoid the crazy jump and catch the stable move. But now there's so much room in the market, I don't think that's nearly as relevant. So there's that. So keep margin percent 500. So marginal percent availability above 500 to 1,000%. Anybody went any below that and had a problem with that, maybe by chance, maybe blown an account?
Could you kind of explain the because I'm kind of new to this. Can you explain that margin thing? Because I know I got two different accounts, and like one, um, I was just starting, so I started with the 1 to 100, and then with the next account, I went up to the 500% or whatnot. But I really don't know, the difference between, the low margin and the high margin.
Okay, so this is based off of how much leverage you have. So I'm guessing you mean when you signed up for an account, you chose a 1 to 100 leverage. Is that right?
Correct.
Okay, so this is my opinion. If you're bringing less than 20 or 10, 20 grand to the table and you're trading with 50 to 1 or 100 to 1 leverage, you will probably make more money driving for Uber than you will in trading. So that's kind of a harsh way to say it, but it's great in terms of business because it really drives the point across. So remember that leveraged money that you're having, you're trading, you can choose whether or not to use all of it. So my advice is to first off, bump up any leverage that you have to the highest possible leverage. Now, a
Okay.
wise trader isn't going to necessarily use all of that leverage available because you can still choose to use a smaller lot size. You can choose to be in less trades at a time. But what that does is it means you're not going to blow your account because depending on the broker you're dealing with, when you get anywhere near 100%, again, depending on the broker, so don't take it as law, they can do what they call a margin call. And what that means is they can not only take your money, the active money that's in there, so that basically you're blowing an account. This is where you can actually owe the broker money. Not that it happens often, it's just that it's possible. So you get charged for that losing trade plus a fee, right? Plus, so when you get a margin call, they take a percentage extra above and beyond what the losing trade's value was. So if it was like negative $56 or $556 and you have a margin call, it's going to cost you more than $556. It's actually more dollar for dollar. So you want your margin to be high enough to be able to afford the trades you're taking. And you get that by having higher leverage. The more leverage
Got
you
it.
have, the more trading power you have, the more capital you have.
Thank you. That's very valuable.
You're welcome. So my rule of thumb basically is 500% is high risk. Anything below 500%, and I'm just, I really try to keep most of my margin in around 1,000%. But this isn't as easy unless you're on like a 2,000 to 1 broker. If you're going for anything that's aggressive, very difficult to keep your margin availability at 1,000%. Most of the time, it's much closer to 5. So if you want to see how you're doing in terms of your risk of ruin, your the amount you're risking versus how much you have in there, watch that percentage and never let it go below 500. If you're below 500, you need to close part of the position, close some of your trades, or make better choices because that means you're being little risky. That's very, very high risk. So I'm going to say we keep that because remember, the whole point is to not blow accounts. Ultimately, our job is to stop blowing accounts so we can grow the accounts. Can't get there if you're busy blowing them though. So,
Hey, Jenny,
Jenny. Yes, sir.
I have a question. Could you explain about the different hours of trading? Say if you want to trade on a 4-hour versus a 1 hour versus a 30 minutes, what's the difference? You know, some people, I know Irvin he likes the 4-hour trading charts. Could you break that down a little bit?
Don't talk about him too bad. He's on here.
I know, right?
No, I'm
What
not
I've
talking
been-
anything about it. I just want to give me a breakdown, just how they work.
I was joking.
Oh, okay.
we joke and play. So the difference in time frames is how long you're going to hold a trade. So a difference in time frame is how many pips you're going to go for, how much you're going to be sitting in front of your chart, right? How long you're going to hold a trade for, how much risk you're willing to, take on, and how long you're going to be exposed to the market, right? So like if you're going to be super exposed to the market for a long amount of time, that's in its own right, that's higher risk, right? Because every second that you're kind of standing out there, a bajillion things can happen in China and in the US. And, with every single thing, it can happen. And now your investment is kind of floating in the market. Once you're in and out, so a shorter term trade helps you have more that sniper kind of, you got your pips, you're done. Even if the world went to crazy places tomorrow, which constantly keeps happening a lot this year, just needless to say, you're not exposed to that. So The biggest difference is preference, time availability, your personality. If you are easily stressed and easily over bombarded, smaller time frames are not going to work for you. And that's not bad. You just have to know thyself. If you are very impatient and you're looking for a plethora of trades and you can't afford to watch it play out without getting super hungry and desperate and entering and exiting, closing for no reason, then the lower time frames are not going to, sorry, the higher time frames are not going to work for you. You're going to want something kind of quicker and more fast. So there's pros and cons to both sides. Obviously, there's a lot more peace in terms of swing trading, a lot more profit potential, but there's also a lot more exposure, higher risk, only in terms of your larger stop loss. But there's no right answer. Like, it depends on you. So if you're super available for certain hours, your best bet might be only to swing. If you're super available for only certain days, there's so many variables. Ultimately, it's what you're going to do best, what you're going to see best. So I think Pat uses somebody was mentioning in one of the groups that he likes the 15-minute time frame lining up with the 4-hour, which makes sense. He was always pretty biased to that 15-minute time frame. Myself, in terms of swing trading, I'm big on the 1 hour, 4-hour. I kind of leaned closer to the 1 hour than the 4-hour, but I have not done that very much since the beginning of this year because of all the craziness. And that was my personal decision. I think Irving does the 4-hour more so than other time frames. There's another guy who does the daily, and ultimately it's going to be what your time availability looks like, what your eyes see best, your patience. There's so many factors, but they're all based around you. I promise you, whether you're following Irving's rules for entry or Pat's or mine's or the guy next door, none of it matters. It just has to apply to you on the time frame you have available for what your eyes see best and your schedule allows.
Okay, thank you.
You are welcome. You are welcome. All right, guys, so to move on in terms of the rules. So another thing was these were basic Forex. This was not based off of one strategy. This was just kind of basic Forex rules. So was don't over leverage your account per currency. And what that means is you're not going to be in 6 NZD trades. So you're not going to be in EN and GN and AN and I can't think NZD USD and NZD JPY. You're only going to be in up to 2 pairs at the very most that have the same currency. And then that's base, okay, or not. Doesn't matter if it's the base currency or not. The whole purpose is that you can't be over leveraged, because then if any one thing happens, and NZD happens to be famous for that, I think 3 years ago, I blew a large chunk of money because I was in 5 NZD pairs at the same time based off of a day trading strategy. So I wasn't over monitoring that account. I wasn't double checking it or looking. And needless to say, huge news, some 100 and some odd pip doohickey that just went crazy, knocked me out of all 5 trades, margin call level, blew the entire account. So there was still money in it technically, but it definitely margin called and blew the account. So you don't want to do that. You want to make sure that you only have so many open trades based off of per currency. And Uncle Pat would call that being over leveraged there's another one. Darn it, now I forgot. It's over leveraged in currency, time, and money. So that's over leveraged in currency, basically. So next, keep emotions out of trading. Don't chase trades, which is a big problem for those of you guys who are spending too much time on the charts. Don't trade at market open. That's session crossover. So that's 5 p.m. Eastern time. Unless you have a strategy that's based off of the day trading chart, you shouldn't be anywhere near your charts between 4:30 and 5:30 p.m. Eastern Standard Time. You should be out to dinner or with your family or anywhere but your computer. And if you are in front of your computer, it should not be analyzing or looking for current trades. That is the highest spread, highest fees, biggest swaps, largest commissions. It is the worst time of day to trade. So everybody kind of on the same page on that one?
What if you're
Yep, sir.
if you're still in a trade?
So if you're
Like-
swinging, then you're going to pay. So that's the difference in the 4-hour. If you're going to be swinging, you're going to have to pay the swap fees. And most brokers have swap fees. And that means if you hold the trade overnight, so over a session crossover, you're going to pay money most of the time. But in some cases, believe it or not, you'll earn some money. There are
Yeah, I
some,
started seeing like as the sessions end, I'll see the it'll be like what commission, I guess. It'll say negative whatever and the trade is still pending. I'm like, where'd that come from? But
Yep.
now I see where it came from.
every single day that you hold that trade, you're going to get charged it again. So
Yeah, I'm stuck in NZDJPY since yesterday, and
ouch.
it hasn't moved anywhere.
That's what we call consolidation. So that's part of trading, unfortunately. But hopefully, if you've got the right direction and you have some patience, give it some time, trust your analysis, and let's see if it plays out. That's all you can do. You're already invested. So second guessing now is not an option. You're already in. You may as well make it good, kind of thing, right?
Thank you, thank you.
Evening, Jenny.
Hey, Scott.
Just to be fair, too, swaps are not going to break the bank. They're relatively small fee.
Cost of doing business. I agree with you. But the spreads opening up, that can break the bank if your stop loss is too tight and then you're
Right.
trading during exception crossovers.
Yeah, pay attention to the overnight spreads. You know, as you do the session changeover at 5 Eastern, you'll see those spreads opening up really, really wide, and make sure you give yourself enough room with your stop loss and your take profit for that matter. Because if the spread opens up and hits your take profit, you're going to execute at the opposite side of the spread, which you won't be happy with.
No, very sad day for trading. Never fun. Nope.
Hi, Jenny. I have
Of course, that 3-day swap too. You want to check on that also.
Be careful with holding trades on Wednesdays are the worst day to hold trades.
Yes.
That's true.
Sometimes it's Wednesday, sometimes it's Friday. You need to check your currency specifications.
True.
Yes.
True. Hey, Eric, you had a question?
yes. Can you explain slippage and how that works and when do that normally happen? I'm still trying to figure that one out.
Scott can explain slippage better than I can.
Okay, when you create an order, like if you just do a market order, just do a buy, for instance, it is saying that right now I have an ask price of X and I want to execute price at X. If the price moves from the time that you specify that you want to buy at X and the time that the order actually executes on your broker's platform, that is slippage. So it's a difference in the price from what you are executing at on your platform versus what the broker executes at.
Got it. Okay. Thanks, Scott.
You're welcome.
Okay, so to can kind of keep going, and if you guys have questions, feel welcome chime in. Super open area to talk and kind of jump as you please. So
Just one more really fast thing about slippage. Generally, it's not a problem. It's only in really fast moving markets like news announcements when you see really spiky looking action, you know, when price is just hopping up and down, that's when you'll start to get that kind of thing. So normal market slippage isn't an issue.
I think that mostly like NFP would cause a lot of slippage. Most
Yeah,
of the time.
any unexpected news event where you see really, really fast price action.
But also most brokers will honor that too, just so you know. So like if there was a lot of slippage, they're allowed so much leniency, but then if there's something crazy that happens and you can prove that your stuff was set, they'll fix it too. So just be kind of mindful of that. But either way, to kind of keep moving forward, don't trade Sundays unless you're gap trading. Just not a great time to trade. The market doesn't have a direction. It doesn't know what it's doing unless you are intentionally gap trading or scalping. This isn't the time to be looking for a scalp trade. It's just not a good time. So spreads are high, possible reversals or pullbacks are high, possible everything is high. So we kind of avoid Sunday evenings in general. I feel like most traders trade Tuesday, Wednesday, Thursday. They skip Fridays, they skip Mondays. I like Fridays, but that's a me issue in terms of scalping. I like Fridays. I feel like there's a lot that happens, but either way, never trade against the trend. That one sounds, we could take it or leave it. We could leave it on, but there's a lot that happens counter trend as long as you know it's counter trend. There's a lot that's possible counter trend as long as you know and are taking that kind of dual confirmation, the extra confirmations that you need Because when you're going with the trend, you can have, let's say, 7 out of 10. You can have 4 out of 10, 5 out of 10. But if you're trying to go against the trend, this is when you need every single thing lined up. You need to be sure that you're sure that you're sure, like you would put your house on it, because literally you are. So keep a trade journal. That's why that whole keeping all the same trades in one account, having a trade manager or a list of things that closed it, if it was your trailing stop, if it was your stop loss, if it was your take profit, knowing kind of what closed, how it closed, why it closed is really a big deal, because that's what's going to help you tweak your entries. It's going to help you know that, hey, you had an 87% accuracy ratio, but your trailing stop is what knocked you out on let's say 30-40% of them. Whereas if you didn't have that, you would have had slightly higher accuracy ratio. You won't know those numbers if you have nothing to base it off of. So, and remember that information is only possible if you actually have a batch of like 30 to 50 trades following the same thing, which most people don't do. Most people don't do the same thing for 30 to 50 trades to find any one thing that works for them. Whereas most strategies will work within some amount of reasonable accuracy if you actually just traded a batch of it. So keep a trade schedule. We already talked about that. Plan time for not trading, so studying. Like, so this, if you are in front of your computer, like this would be the time that you are analyzing your trades. You're doing some training. You're on a call with whoever, but you're not actively trading, because a lot of rules of thumb, a lot of gurus and business books will all tell you, well, many will tell you, I should say, it's not all action. It's 80% problem solving and thinking and planning, and 20% action. So that 80-20 rule applies here as well. Pick a time. Go ahead.
Yeah, Jenny, this is Fritz out in Florida. Yeah, hi. Listen, I heard you mention trade manager several times in the past. So what would you explain that, please?
So like Scott, the gentleman that you heard this morning on the call and that
Yes.
you heard just now, he's a coder, kind of, he's got his own trade manager that he's going to be releasing soon. And it's actually beta testing right now in that same group that you're in, the morning time group.
Yes.
So go in there in the chat, and I'm sure that they'll help you get it on your chart. But a trade manager is essentially an expert advisor. This one that I'm speaking of currently is well thought out. It's got specifics for every half of a specific. It's very well done. It's a little complicated to learn, but it's well worth it once you do. So ultimately, it's something that can help you either trim in and out of a trade, well, not in, but trim out of a trade. So partially profit, close part of a trade. It can trail your trade based off of rules versus just a number. It can provide stop losses and take profits. And it can manage all the trades versus just one. It can trade based off of ATR. So that means average trading range, instead of just trading off of points or pips. It can actually use the data that's specific to that pair, or that currency, or that instrument essentially that you're trading. So it's quite inclusive. It does have a website on there that will let you kind of go in, and that's where you're going to start. Other than that, there's a few others that we can discuss a little bit more beginner level, but we can discuss that more, I guess, on Thursday morning, since I know you'll be there. Deal?
Thank you.
You are welcome. Okay, so keep a trade schedule. We said that. Pick a time frame to trade from. Enter in on one time frame down below it with confirmations. So like what that means is if you're trading off of one time frame, we don't have to look at 50 time frames. That's just going to trip you up. On most people it does. However, you can enter in on one time frame below if it, with more confirmations or whatever, or as a re-entry, like depending on the strategy you're using. So those were just some basic Forex rules. Is there anything on there that you think should stay or should go or should be added, just for basic things, for basic people, new people to know when they come to trade? Anybody at all?
I think that hits all of the rules.
Okay, thank you, Don. I think so too.
You're welcome.
Hey, there's some. Go ahead.
What would be good if you would make it available in the group?
This is available in the group chat, and I'll repost it today too.
Okay, great. Thank you.
You're welcome.
Hey, Don, I would recommend practicing on a demo. Demos are very valuable, and practice before you start putting actual money into it.
Unfortunately, I agree, although I did not take that advice. I did not start. I should have. But I definitely think that practicing on demo is it's a legit idea. And if you do use live money, just use 0.01s. It's not a big deal. There's no shame in practicing with a 0.01, because if you keep a 0.01, it's going to take you a lot of trades to blow that account if you're, following any set of rules. So that's not a bad way to be either. Demo versus real. So I agree with that. At
You
least
know, if you do practice with a demo, don't go out and get the, I guess, the largest amount available. Get a demo account that's equivalent to what you're going to start trading with, and treat it as if it's real money.
that
I agree with
psychological
that.
piece is hard, because I know people who can quadruple my results, like hands down, honest to God, in a demo account. But then the psychology, and they can show me, like we can drag and drop the trades one by one and say, look what I just did, and I'm like, wow, man, this is perfect. The timing is amazing. Like this is the incredible, like truly amazing. And then they go to do the same thing on a live account, and all of a sudden they're in their feels, they're hyperventilating. I'm guessing these are the people that don't take good tests. Like in life, there's so much psychologically and emotion that goes into real money, that even if it's a small amount of money, there's like stuff they have to get over mentally and emotionally. So there's that too. But yeah, until you have a accuracy, have a batch of the same trade.
Hey, Jenny, I have a question.
Yes, Hot Rod, what's your name?
Hey, this is Rod. What do you do to overcome like getting to a certain threshold and keeping that threshold? What I mean by that is, like, I'll get my account up to something pretty hefty, and it seems like every time I get to that point, I start just trading totally different from the way that I normally trade, and I end up losing money sometimes. It's like, for example, you get your account to $5,000. Well, from 0 to $5,000, everything's perfect. You keep the same trading mentality, same methods. As soon as you hit about $5,000, like things start changing. My psychology will change sometime. What do you do to keep that under control?
$4,500 and say thank you, market.
That too. We've done that before.
So get in the habit of, so what I did, so that's a real question. That's like a deep question. What I did first off is, we all have a mental block. I can't say if yours is like, for some people, it's like almost exactly at their annual income. For some people, it's like
Right.
at this, whatever, like the biggest amount of cash you've ever seen in your life is, it's that level. For some people, it's like, it's different for everyone. I know where mine have been, and I know how I've gotten to the next one, and I know where mine is now. But it's a real thing to where when I hit this number, all of a sudden I took trades for reasons I would have never taken them, on days I would have never taken them. Everything psychologically, it's almost self-sabotage, because it literally is. And it's subconscious at times. And it might not be that you're fully aware of it when it's happening. But when you go back to analyze, and you can drag and drop, let's say 50 trades, and say, okay, I see why I did this. This followed these rules, and this was right up until this point. And then all of a sudden I got dumb. I went crazy, like obviously. So, well, number one, let's say your number is 5,000. Well, every time you get to 4,500, withdraw. Okay. And then when you get to 4,600 next time, withdraw. And you might have to baby step it. So that's what I had to do, is I had to kind of baby step it when I got close to certain numbers. I kept blowing 20 and $40,000 accounts at first, almost like it was religious. Like, and I could make it happen so quick. It was crazy. Like I could do it and then gone, do it and then gone. And again, most of the mistakes I made weren't even valid. Okay, the market went against me, my analysis was wrong, or it wasn't a valid loss. It was I didn't put on a stop loss. It was, I went to the mall and I knew I should have protected those Bitcoin trades, but I didn't. Like, so every one of my rules, I broke it out of all these, subconscious, and I can get into the psychological level, but it really is psychological, that made me not do what my job was to do. So my own rules, my own purpose, my own strategy, no one there to hold me accountable, but I did that. So I can tell you where my levels was, and what I had to do was I would start baby stepping it. And when I got to, like, for example, anywhere in that $20,000 to $40,000 range at first, and then of course it's much bigger now, but now my next one is harder to break past, I think, because it is a bigger number. But what I did was when I got to like that 20 or 30,000, I had a laminated checklist kind of on my desk, and I wasn't allowed to take a trade until I could check those things off. And then I had the management checklist kind of next to it. Of, okay, did I apply my trailing stop? Did I move my stop loss? Did I protect? Or depending on what strategy and kind of what system I was using at the time, or if I was using like the Ron's trade manager or whatever my process was for that. But I literally just had a sleeve. It wasn't even laminated. It was like the plastic sleeves that and a washable marker that I could double check and say, okay, so this was done. I can walk out of my office. And I wasn't allowed to take trades from my laptop, like in my bed, laying on my tummy or whatever. I had to take trades only in my office and only in front of that. So I couldn't edit it on my phone. I stopped trading altogether on my phone during those times because you have to be extra disciplined during times of stress, right? You have to be extra careful during whatever your weaknesses or strengths are in life. And that goes for look around at our world. Like, we have to be extra careful to protect our mindset. And that's that whole be extra careful kind of mentality is how I approached it. So at first I withdrew, in increments when I got higher. Then I would withdraw half because of course I wanted to break those humps. I wanted to get past that. And then the final, last but not least, was to have very, very strict rules when I got to like that $250,000, for example, to not blow it when I hit 300, when I hit for it, to not blow it at that level. Is, keep in mind, one dumb mistake on a huge lot size and mismanaged, it will only take one, because your margin is different, your leverage is different. When you get to bigger accounts, it's all vastly different. So one mistake on a big account and it's all gone. You're talking, 6 figures down to $400 kind of gone in a split second, like a split second. So
Agree.
it's ugly. Well, Derek would know. He's done that, I think. I'm pretty sure.
Yes, I have.
Big numbers to nothing in like
Sugar the manure.
not easy, guys. It takes a lot of mental and emotional discipline to say, hey, I'm going to be self-accountable and there's no one here to babysit. Because when you get past the blame, and from the EAs and the bots and the trade managers, it's only you. It's only you in front of that computer screen, and you are ultimately in charge of your success and your failure. So, because here's the other problem, that was Eric, or who was that? Who asked that? Sorry, who asked that again?
Rod.
Oh, right. Okay, sorry. I should have known that, Hot Rod. Okay. So the problem with that is you have this whole emotional thing that tells you, wait a minute, what I'm doing is working. I just made $5,000. What these actions I'm doing are sound, they're valid, they're reasonable, and they're effective, right? So when you have this evidence in front of you, let's say you took your account from 200 or 300 to $5,000 in a handful of days or in a week or whatever, and then you have that proof. So you can no longer blame Jenny. You can no longer blame Pat. You can't blame the system. You can't blame anything but you, because you just saw that it works. And like, it's a whole emotional process of, oh my gosh, it works, but I'm the one messing it up. But I think that you are the problem sometimes. Speech is, insert that here. I guess that's all I've got to say on that. I don't know if that helps or not, but is that a good idea? Maybe. Psychology around it is just amazing. I just always seem to lose it, but I'm learning how to withdraw. That's good. Maybe take some of your money out, like you said earlier. Somebody else said every time I make that much, I end up giving it back. One of the people in our advanced group made 70 grand and gave it back. 70 grand in what I think it was not even 2 whole weeks. So 70 grand and gave it back. So whatever your level up in life is, you got to withdraw it. So I don't know if that helps, but there's that. Okay. And I'm going to mute you.
Hey, Jen, I have a question.
Hey, Freddie, how are you?
Good, good. How are you? The thing that I'm trying to uncover is the time frame of taking trades. Like, I know that I hear some people say, oh, they, trade London sessions, so they're up at 2 a.m. to 4 a.m. and I hear some people say 6 to, to 8. Is it like, what is it? And I see all the system, even I went through the, the tutorials where Uncle P was saying that, his best times are this time and that time, but it still seems like I'm always at the back end of the move.
Okay, well, here's
Like
the
when I'm getting on the charts.
first thing you need to do is ignore everybody else. Like, I don't care if I tell you this is the best time to trade. I don't care if anybody else tells you anything. Like, I don't know if that was your background that has children. I don't know what your schedule is, but you need to take a good hard look at your schedule. Okay, go to a volatility calculator, or Scott, what's the name of that website we talked about this morning? It's something. Hold on.
Yeah, I got it. I went there this morning when he said it.
Okay, so that website, whatever that one is, it's a website. So like, you need to honest to God, and this is meant with a ton of love, is don't listen to anybody but you, because for me, I can tell you, I am not a London trader. I am not super in support of people sacrificing their sleep to be a London trader. So yeah, that was Derek coughing up his lungs right there. So like, because here's the reality. Even if you got good at it, let's say you get really good at it. Like, let's say you master the London breakout strategy. Woohoo, great for you. But for you to sustain that is not likely. So even if you did really good, your judgment, your sleep patterns, your psyche is going to be a mess within a few weeks. And then you're a walking, talking zombie. And that's just not a good mindset to trade in. So if you know you constantly have available time at 5 a.m. Eastern and you can fit that in, rain, pour, or shine, 4 days a week. If you know that Asian isn't the best, I'm not going to fib for anyone, but if you know that this is the time that you have to fully analyze your trade, you need to find the pairs that move best for you around the time that you have available. And that means for swinging or scalping or whatever. Like, because it doesn't matter if it works for me, but my schedule is going to be different. My children are older, except for my youngest, and Derek's schedule is going to be different. He lives in California. Pat moved to California. He's really wishing he moved to the East Coast, because he only moved with his family. He's up like at 1 a.m. and 4 a.m. trying to catch all this stuff. And then, of course, it's not easy. So you have to make those decisions based off of you. Does that make
Boy,
sense?
somebody talking about my ears are burning.
I know.
Yes, that makes perfect sense, because I was spending the last like three weeks, even before the system, the past, I say month and a half, when I really just started trying to learn the business. And I've been wrecking my brain because I still work right now. And it's like trying to find that time. I'm staying up to 2 or 3, then I'm trying to work, and I'm looking like one of the little cats with one eye open and the other eye blinking, because I'm like, oh my God, I'm tired. Then I'm in the morning time trying to get on and catch trades. And I'm like, okay. And every time I'm seeing the charts, it's like, dang, the move has already happened. So it's technically, I just need to make it as like a work shift and find the hours that I want to sit there for those 2-3 hours and manage my charts.
If you can afford it, honestly. So where do you live?
In Tennessee. So I'm
Gotcha.
on Central Time.
Okay, gotcha. So either way, Central Time. I guess. And what time do you go to work in the morning?
Roughly about 8.
So that's 9
An hour
a.m.
behind you. Like my time.
8 is 9 my time. So that's kind of perfect. Like, you have time in the morning to go catch a couple of moves. Like GU is moving, any of those, and NAS and US 30, Euro USD should be moving. Most GBP pairs will be moving around those times. Euro pairs will be moving around that time. Like, you're going to get movement. So that's what, 7 to, you start work at 8. So what time do you leave for work?
Roughly about 5.
You're up at 5. So what time do you leave for work?
I leave for work. Well, right now with the pandemic, everything is adjusted. So I'm actually comfortable with being able to work from home. So now I'm just on the chart, but I know once we go back, I'm gonna have to adjust all that, because I have to get back into the swing of leaving and going into the office, versus now I can have my laptop up while I'm working and kind of just watch the charts.
All right. Well, good news and bad news. Unfortunately, it looks like the world's shutting back down. So you're pretty good. So, but secondly, you have time. Like even in the central time zone, you have time to couple hours before work. If I had to pick your schedule, that's what I would pick. Now again, I don't know you from Adam. I don't know what your home life is like, but if I had to pick one for you and I could make it sustainable and consistent, that's it. Because again, we can catch London. I can make some money in London, but I can't do it consistently. And within 2 weeks, I'm a walking, talking zombie. I'm no good to my family and I'm no good to my charts. So it's not an optimal kind of decision. So that's what I would do if I were you, is I'd pick those times and I would stably look. Obviously, you can use the trade manager or a trade manager. If you have, since you're in a position now where you can double check or kind of manage your trades, great. But once you set it, then set it with your trailing stop and your stop loss, or you take profit or however you're doing it, and then hold yourself accountable. So you had your analysis, and now your job is to actually trust that and leave it alone long enough to actually happen. So don't overcheck your charts for the next 4 hours and see how it works. You might be unusually surprised and super happy that when I stopped staring at my charts, all of a sudden this got really easy. Maybe.
Yes, I found that, and it's funny because I'll wake up and I'll be up, and then it's like I'll close the trade, knowing I can put a trailing stop on it, but I'll close the trade because I'm so used to seeing it in the past where it'll be in good profit, and the next thing you know, it'll spike back the other way. So now I kind of got that FOMO. Now I don't even want to know, but it's that fear of it going the opposite way on me. So I'll just close it. And then I'll look at the charts and it's like it's continuing in the position that I said it was going in the first place.
Yeah, that's a bad problem. That's a psychological though. You know that, right? That's all emotional control. That's it. That's it. So.
Yeah, I know.
Okay, well, I believe in you. You got this, okay?
Thank you. And last question, Scott, on the website that he gave out this morning, I was looking for to see the volatile pairs, and I couldn't remember exactly under Forex where did we go to see that. Do you recall?
No.
Okay.
Hold on. Let's see.
Scott's making dinner.
There he is cooking again. You guys hear this? Hey, Wendy,
I'm
how's
looking at it right now. It's in the
Men,
tab.
men block your ears. Men block your ears.
no
There's
Wendy?
there's a 3-line tab on the right. It's inside of that tab.
Okay, hold on. We were gonna joke about dinner, but where is it at? Hold on.
There's like a 4-line tab to the right of the little plus person. And it's inside of that tab under trading tools.
Huh. Forex.
Talking about the mataf.net site.
Yeah, I think it's in trading tools, isn't it?
Yes, it's in trading tools inside of that 4-line tab on the right.
So here we go. So this will tell you kind of how much it's moving at certain times, right? It's the ATR per hour. This is the average trading range per hour.
Okay, awesome. I was there. I just did because I was looking at the screen, but I was working as well. So I was like, I can't remember what he said. But awesome, thank you.
I wonder if this is MT4 time or
That's what I was about to ask. Is it server time or what?
That's got to be server time. This is market open. This is market close.
Gotcha. Yeah, because they got 0 through 23, so 24-hour day. That makes sense. Yeah, server time.
Yeah, it does. Let's see. Let's go to GU.
I think there's a place where you can input your time. I know I've looked at this.
Oh, okay. You can put
so you guys see this is London. This is London. This is New York. That's real low for New York. Very low. That's interesting though. Either way, if we're right, this should be market open. So this should be 5 p.m. Eastern Standard Time. This is kind of through Asian, kind of picking up London, New York. That's interesting. Now we've got my attention. Let's go to a pair that trades Asian. Pips, it's moved. Any JPY pair is moving a lot of pips for sure. A lot more than usual. Euro odd is my least favorite pair, and honest to God, Wednesday it's the most expensive pair, not a great pair to trade, so don't trade that one if you can avoid it. To the guy in the chat who said that you're lucky to be in London, till this group. I never took advantage of it. Honestly, like if it wasn't for my children, and well, I love my mother, but she's in Colorado, I would totally move across the world to London just for a little while, just for a few years, with the sole purpose of like buying so much real estate that I never traded again. Well, I probably would still trade just because I like the challenge, but just to be there for this much volatility, I just can't do it consistently. If I could do it consistently and be a good mother and a good person to society, I would do it, but I can't. So
Southeast Asia would actually be perfect.
Asia, I'll go to China for a year. My youngest already knows.
Oh, you don't have to do China. You could do like Malaysia or
Bali?
Thailand or something like that. Or well, Singapore is expensive.
Indonesia. Indonesia.
Yeah. Oh, okay. Yeah, Indonesia. That's fair. Yeah.
Pretty beautiful there.
Yeah. Go to Bali and get a nice connection, right?
I want to go to Bali, actually. I want to spend 3 months in Bali.
Yeah.
I don't know who that was.
Okay, somebody's having fun.
I know, right? Hey, but Wendy, I was going to ask you, are you still searching for my future husband that cooks dinner?
Unfortunately, I'm kind of locked in the house. I would say locked in the house, but I'm not seeing anybody. So
Okay.
sorry, I can't really search much.
Okay, well, you're on duty, you and Barbara. I'm telling you.
I don't know about this Scotty guy. He making all the other fellows look bad, you know.
Aw.
Have to catch him walking around the corner one day, you know.
Donna just wants me to end up with a super good-looking Texas Ranger guy, but Barbara and Wendy at least have the personality in mind. So if they can just
Excuse me.
That sounds like a lot of haterade there. A lot of haterade there.
Uh-huh. There's truth in that, just so y'all know. So there is some truth in that, I promise.
Well, she does live near the prison.
Oh, she does.
A little bit, but not much.
Hey, Donna, I have a quick question for you real quick.
Okay. For Donna. Chris.
For me?
Hello?
Muted.
Can you hear me?
Yes, we can hear you.
Excellent. Question: when it comes to you actually stacking, do you like to just place, let's say 2, 3, 4, 5 entries on your initial entry, or do you kind of like place like 1 or 2, let it ride, and then just wait for the retest and then kind of place your other ones as well, or kind of how do you like to do that?
I'm guessing that question is for Jenny and not Donna.
Yes, my bad. I said Donna. I meant Jenny. My bad, Donna.
Uh-huh.
He saw that photo and got thrown off, huh?
A little bit.
Okay, see, I see how it's. Anyways, when I first started doing this, I was stacking 4 trades. That was prior to me having any managers. I didn't have any managers or stacking bots at the time. So in order for me to scale out, that's how I was effectively able to do so. Was I took 4 of the same trade with varying lot sizes, only with the contention of not taking one large trade that I would have to go in and manually close. With these would manually close at different take profits and have different trailing stops, or sometimes the same trailing stops. So now I'm using trade managers and or bots that kind of will scale me in. So that's not ultimately you're still only looking for a certain percentage, right? Per trade. So you're still going to be using the same lot size in theory as if you took 4 trades at a 0.25 or as if you took 1 trade at a 1.0. The only purpose of doing it that way was that it would scale in and scale out. So
Right. Okay. Cool. I appreciate it.
Jenny, can I ask a question to piggyback off of that?
yes, sir.
So when you're doing the 6-figure challenge, do you stack off of that in those lot sizes, or if you're scalping, or you shouldn't do it according to that?
If I'm doing like the scalping, I'm not stacking. I'm in 1 to 2 trades at the most. I am not stacking. I'm not taking multiple trades of any kind of different pairs or not. Because you have to think I'm maxing out my leverage on that. Like I'm maxing out my margin. That means my margin is almost always at 500 or even slightly below, and I can't afford another trade. And even if I could technically afford another trade, I would be foolish to take one.
Got it. Understood it. And I have another question. I know I'm a scalper now. I like scalping, and I'm the tending out guy. And thanks to you, I really appreciate that. What I find a lot is the drawdown. As soon as you enter the trade, we follow the rules, the golden rule. But I know you have to eat the commission and you have to eat the spread. But I'm finding that in order to get my 10, I got to suffer a little bit going the other way. And it's like, is that a patience thing? Is that just part of the business? I would just like to get in some trades sometimes and then just go the right way. But it seems like 90% of the time I gotta take the drawdown for a while, because that'll go down there quick, but it will come back up kind of slow, but I'll eventually get the 10 pips.
That's it. Part of the psychological. So entry, like not waiting for the pullback. Hey, Will, there's background noise. Hold on, let me mute him. I'm sorry. There we go. So part of the psychological, part of it's actual, but either way, to answer the first part of your first question, which was eating the spread and the commission, you have the choice to kind of go for a slightly higher than 10 pips. So like if it's NAS, for example, you'd be going for like 120 or 130 pips to kind of cover your commissions or spreads if your broker has them. But in terms of like, is there a way to guarantee the trade is about to go in your favor? I'll make you a deal. Whenever you find that way, by all means, you call me. I'll give you my own number. Okay. Otherwise, we're doing the best we can to go with the trend. And sometimes we take an entry and what we in real time feel like is a pullback and feel like is the market purposely trying to give us, a heart attack, is really just basic market fluctuation. And you'll get more comfortable with that as you start being able to have a pool of 20, 30 winning trades. As you have a pool of, I just, grew $200 to $5,000 in a couple of days. So as you have that winning pool of trades, you'll realize, and even back testing, I feel like if you have the capacity for it, go back test. Like just go, don't take any live trades. Just go take a look at what happened as a candle plays out on a live moving candle using the strategy tester on MT4 or the back tester on TradingView, and just watch how the candles move, for and against and side to side and up and down and left and right, and watch it. And once you kind of get the swing of it, you'll say, okay, and you can pause it every time I would enter here, pause, draw your little line or draw whatever you need to draw to help you see it. And then just watch. You'll see it probably go against you. You'll see it go in your favor, but none of that will matter in this big batch of like looking at the big picture. So like the 10,000 foot view or the bird's eye view, whatever they say, right? If you look at trading like that versus this, we're staring at our screen, we're like hyperventilating. We have a 0.5 on a NAS or US 30 trade, and a 0.5 that goes against you by 500 pips is life-changing amounts of money for anybody. And you're watching it pip by half a pipette go against you. It's heart-wrenching. But once you understand the ebb and flow of the market, you're like, okay, so I know where it's going or where it might not go, and this is what it is, and I can accept the win or the loss because it's part of my algorithm. It's part of my trading rules. It's totally
Yeah,
okay.
I wanted to make sure it wasn't my accuracy on getting in the trades too.
Well, what is your accuracy? That's the question.
It's been pretty good. I'm actually thinking about in the other class letting you look at a few of my trades too, to
Okay.
see if I am getting in the right. I just wanted to make sure, because I feel like I'm doing everything right, but I just always feel like I got to take a dip and then, like you said, try to get my emotions together. Because now I'm 10 out, but sometimes I'll just take 8. Sometimes I'll take 5 because I had to wait so long for it to come back.
That's that patience thing. So, hey, listen, Eric, before Thursday morning, can you do me a favor? Can you take a list of count up all the trades that you've taken following the same rules in the last however many weeks it's been since you've been 10 and done, and take a kind of a log of how many you've won, how many you've lost, how many you've closed, how many have hit stop loss or hit take profit, you know, kind of thing. And let's look at those numbers because our feelings lie a whole stinking bunch, but numbers never do.
Okay.
Okay.
Mm-hmm.
All right.
Hello.
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 Hey, Jay.
Hi. I'm good. Thanks for having me in your course.
Yes.
I got a couple of questions for you real quick.
Okay.
Okay. Well, I'm not necessarily new to trade. I have 2.5 years of experience and I was getting real consistent, but I've been out of the market for 6 months, not because I lost in the Forex, but in another business. So I have been following you guys' system for quite some time. And I'm just about, this will be my second weekend. I scored about cumulatively last week about 300 pips. So that was pretty cool to break the ice because I haven't touched the market in 6 months. But I don't really like sitting in front of the screens and things like that. So what I want to do is learn your strategy and incorporate some of the scalps that you do on maybe possible some swing trades. But seeing I don't like to sit in front of the screens, what, if any, indicators would you recommend on the MT4 mobile?
Oh, you want to be trading from your phone.
No, I like to get the alerts from the desktop, but I have another business that I'm involved in, and I don't want to sit in front of the screen all day waiting for the alert. So when I do get the alert, what I did, I told Uncle P this in the class that I highlighted the hot zones, the buy and sell zones on the 4-hour chart. So when I do get a signal, but what, if any, indicators would you recommend to put on the mobile phone to compare to what's going on with the desktop?
Okay, so first off, what you have to know is that hot zones are just Fibonacci ratios. So you can,
Okay.
and then once you know that, you'll see it. Once you learn it, you can't unsee it. So
okay.
Secondly, let's see. How do you say? So I like ADX. First off, I'm very partial to ADX. It's called the average directional index.
Okay, I'm writing this down as you speak to ADX. Okay.
Set at 10, and I like my level set at 25.
ADX 10, level 25. Okay.
And that's going to tell me if the momentum is high enough. If the momentum is not high, stay out of the trade. And
Okay, you want high momentum. Okay, great.
And of course, you would need the buyers or sellers in control. I'm kind of partial to MACD personally. I like almost every version of the MACD, and I love the way it tells me a story. So MACD standard settings, totally fine. Learn to read it if you don't know how to read it.
I've been doing that since I saw you guys mention it in the group chat. So I added it to the mobile, not the actual desktop, just so I can watch and see how it works. Because I never really used the Mac. I was more so stochastic, just for further confirmation. But I'm kind of getting the hang of how it flows a little bit.
And the next thing, sorry, my son just scared me.
No, it's okay. I got 2 twins here too. So if somebody comes in the room, fighting and screaming, that's what they are.
Okay.
Bless your heart.
All right.
Yeah, 2 4-year-old UFC fighters. I'm in Las Vegas, so they're already in training for Dana White. I'm serious. I got videotape. We're ready to take the belt.
Okay, gotcha. Well, the next thing I would tell you is pretty directly, if you're using stochastic, RSI or TDI or any of those indicators that people use as overbought, oversold, don't use them the same way everybody else uses them. Use them with the trend. So meaning if you're above and below the 50 line or the 0 line, you're in buyers or sellers territory. Stop looking at it like, hey, RSI is at 80, which means we have to go down. There is no such thing. I mean, you could get a pullback.
That's correct.
There's no such thing as overbought, oversold. So let's get that out of our head and don't use any oscillator like that. And if I had to put it on my phone, it's going to be the 50 EMA.
Okay, I have that. Okay.
Gotta have my 50 and pick any other smaller kind of time frame EMA and just have a really
I found great consistency with the 10 linear weighted moving average. And then I had a buddy who's still involved in trade. He mentioned the 7 EMA, and those actually kind of move identical. So I said I'll just keep the 10 linear weighted. That was one of my little trusty go-tos before.
You have a linear weighted. What is it weighted to?
The most current price action.
Gotcha. Yeah, that would be, the more you play with those like weighted and shifted EMAs, one just equals another because you're literally adding and minusing numbers. So
yeah, I noticed that. I know when I put the 7 EMA on the chart, I said, oh, that's just the 10.
I have a friend called me and says, hey, you got to do this. It's the 13 shifted by 6 or whatever. I'm like, so it's pretty much the exact same thing as my 8, right? Like,
Okay. It's the same exact thing.
yeah,
So
it's
so for moving averages, you go 50
Mhm.
and maybe stick with a 7, seeing 7 is pretty much like the 10.
If your eyes see that, well, then stick with that. That's totally fine. My
Okay.
eyes see 8. It works for me, and
Okay.
that's going to give you enough confirmation to really get a good picture of what is price doing, how is it
Okay.
going to react at this certain point, and what's going to happen next. And then, of course, you got to have some really good rules in terms of if you're trading on the fly constantly, like all day, like, or are you going to take certain trades during certain hours?
No, certain hours, my prime time before all the, prior to me not being in the market was after the London session. So what a coincidence with Uncle P's when I went to his class. I said, oh, that's the time I was going in anyway, the London crossover. So that's pretty, so, now that I'm in Las Vegas, because I'm from Buffalo, New York, originally that was a big thing getting adjusted to the time. So now seeing I'm back in trading, I'm usually up at 410 and usually at the chart, maybe around 420, 425,
Nice.
which is 7:30, 7:25 Eastern Standard Time.
That's perfect.
Yeah.
That's like,
Okay. So ADX level 10, ADX 10, level 25, MACD, 50 EMA, and then the lower EMA where my eyes are already stuck with, pretty much. Okay, cool. Thank you.
you are welcome.
I really like your style, so I want to learn how you're doing it successfully, and I'm still learning the 4. That was me in the group chat about the 415 Uncle P strategy, because I've been watching the videos and back testing because I had free time, and I scored about 60 pips today, so that was me in that group chat earlier with that.
I was just like, so man, I can't keep up with all these numbers and abbreviations. I was like, somebody just what? But
Yeah, the 415. Yeah. So, but quick question for you, because you said like when you're going into a trade, normally I used to be able to catch the wicks of an hour candle very, very good. So let's just say if we go in, if I see a 4 and then I go in on the 15, should I drop down to the 5 and wait for a pullback? And then when it goes back into momentum, add on, let's say stack additional entry? Because I'm just still a little rusty with that.
Like if you're using the simplicity kind of like Pat's way, 4 hour. I wouldn't be personally, like, I'm gonna trust my analysis. I would either protect my trade or let it run. If
Okay.
it broke another level, I would take another entry. If
Okay.
it broke another level, but if it didn't break another level yet, I have no business putting more money on it. So unless
Okay, gotcha. Gotcha.
turn it around or broke a new level, so it has to complete to one of two patterns, either the pullback flag, kind of stair step as we call it,
Okay.
or broke a new level. But other than that, there's no reason I'm going to put another entry on it.
Okay. Thank you very much for the information. I enjoy your class and the way you're doing things.
You are welcome. Well, thank you for coming to hang out and participating and talking for a bit. So I appreciate you.
Okay. I'll be up here again. Thank you.
Yes, sir.
Mhm.
All right, guys. Well, I think that's about it for the day. I know we didn't technically get through this, but I just wanted to do something a little different tonight to kind of go over a different set of information, because I think this information is sometimes more important than the actual charts. We spend a lot of time looking at charts and not enough time looking at info. So
Excuse me. One more thing, Jenny, will you be posting this into the group chat? This, the rules right here? I want to take a look at them.
yeah, this is in the group chat, but also I will repost it also. So it'll be freshly posted tonight. And then it's also in there, and then we'll post the video too.
Okay. Thank you very much. I appreciate it.
You are welcome. All right, guys. Well, that's about it. I try to keep it about 1 hour in terms of the evening classes. Tuesdays are typically kind of a longer day. So thank you for everyone who came and hung out and participated. Thank you for those of you guys who are constantly learning, constantly stepping up, being humble about your experiences and honest about well, fine, we've made 6 figures, but how many times have you given back 6 figures? So, and all that other good jazz. That this environment is kind of how we grow and how we learn. So I appreciate every single one of you guys. I hope you guys have an amazing day. And I will talk to some of you guys on Thursday. Take care and God bless.
Thank you.
Good night.
Thank you,
Thanks, Jenny.
Jenny. Bye,
Thank
Jin.
you.
Thanks.